What's up, everybody? Welcome back to HPT. Today in this video I want to break down some simple principles that allowed me to crush the market December 31st, 2024, right? I want to show you guys what actually helped me in the knowledge I had that helped me enter into the market where I did, put my stop losses where I did, and hold on the trades the way I did, and more importantly, stay away from trading choppy market conditions. See, it's not a discipline problem. It's not a patience problem. It's an awareness problem. You need more awareness. You need more knowledge that's going to keep you from making these bad decisions in the market, right? So I want to show you guys a very simple way on how I do this, right? And the number one thing, first thing I want to talk about is a very simple but basic concept, and it's universal law, right? Laws govern the universe. What do laws give us? They give us expectations. See, if you can understand a law or a principle, you can then expect a specific outcome. What do I mean? Very simple example. I have this hat here. Universal law of gravity tells me if I hold this hat in the air and I drop it, it's going to drop to the ground. Do I need to do anything to make that happen? No. I just need to understand how that works. Gravity doesn't change based on who is doing it, right? It could be me, it could be anybody holding this hat up. If they drop it, it falls, right? That's a very simple understanding of the law of gravity. How does this affect our life, right? Because once again, if I can understand a principle, I can then apply it to my life and expect things. Well, very simple thing is if I'm on top of a roof and I need to get to another building, it's probably a bad idea to jump. Right? So understanding the law of gravity will keep me from jumping off a building. Therefore, it's saving my life. A very simple understanding of how gravity works saves my life every single time I'm on a building or whatever the case may be. So this is how principles help us make better decisions. And the market is no different. The market has tons of principles that it operates on, right? The law of supply and demand, right? The law of moving averages, the law of critical levels, right? The law of the red bar ignored, green bar ignored, right? I'm actually developing a course that's going to break down tons of market concepts and principles. And the more knowledge you have of these principles, the less roofs you're going to jump off. You see where I'm getting at? So I want to show you guys how I executed on this day, what I was looking for, and how my understanding of principles allowed me to make the decisions I did. So the number one principle that I always talk about, you guys know it, it's like the main thing I'm known for, is the law of critical levels, right? Critical levels and pit numbers. What are they? Well, they're levels that have intense amounts of volume. They're levels that come from the previous day candle. This is previous day high, previous day low, previous day open, and end of day, previous day close, right? These are four main critical levels that come from a daily time frame candle. I don't have time to break it all down, but that is law number one. We have to understand why they're important, and we have to identify them. So in front of you, you're going to see I got previous day high up here. I have open prayer, end of day, previous day OP, and then we have previous day low. So real quick here, before we go any further, let's break down real quick the pre-market plan and what I was looking for, right? So I post a pre-market plan every single morning in the Discord for me and my team, and this is what it was, right? We're looking at here previous day high, end of day, pre-OP, and previous day low. And more importantly, I've identified bearish structure here at previous day high, right? So the market communicates to us, but it doesn't communicate to us through language. It communicates to us through market structure. If you can learn to understand market structure on higher time frames, you're going to make way better decisions. You're not going to be jumping off buildings, right? You're going to be making decisions going, hey, listen, is this chart pattern in front of us bullish? No. Therefore, maybe we should look for sellers to show strength today, right? See, once again, understanding that principle will keep you from killing yourself in the market. I use this analogy constantly. I coach a lot of traders, and they struggle immensely with rushing into trades, taking bad setups, forcing setups, etc. I used to be one of these traders for a very long time. And they go, Josh, I need to become more disciplined. How do I become more disciplined in the market? And I tell them, it's not a discipline problem. And it's an awareness problem. It's a knowledge problem. If you had the proper knowledge and you understood it, there's no way you'd be making the decisions you're making. It's very simple. It's like somebody that's late and they need to get to work. Are they going to drive on the wrong side of the road? Maybe for a little bit, but not the whole way. Why? Because it's extremely dangerous. And they understand, hey, my life isn't worth me getting to work on time. Therefore, I'm not going to drive on the wrong side of the road because there's going to be oncoming traffic coming towards me. See, knowledge of that principle, that concept, will keep you from making the bad decision. And then you'll look for a better decision to get to work on time. Maybe you'll change your morning routine, right? Therefore, you're not extremely late, right? So you see what I'm getting at here. It's not a discipline problem. It's an awareness problem. If you had the proper knowledge and the proper understanding of the knowledge, of the concepts, of the principles, you would be making different decisions, right? So that is what I look for each and every single day. That's the pre-market plan. So now that we have the critical levels established, the pit numbers are established, what's number two, right? Well, number two is identify a healthy relationship between price action and the moving averages. So you guys know how much I love my moving averages. My moving averages are literally my right hand in this market. Why? Well, they give us very simple but extremely effective understanding of what price action is doing. I used to struggle immensely with forcing bad setups and trading in choppy market conditions. I don't have that problem anymore. Why? Well, look at price action here, and let me ask you a couple questions. First things first, open prints established. We get strong selling off the gate, and we get extremely extended from my moving average, right? My favorite moving average is the 9D EMA, that blue line right there. Anytime I'm extended from that moving average, there's no way I'm making a trade. Why? Well, very simple principle of the market is the law of balance, right? The law of polarity. What goes up, what comes down, the market corrects. So if I'm getting extended from my moving averages, I have to accept that it's 9 times out of 10, it's going to gravitate back to the moving average. Does it happen every single time? No, it doesn't. But it happens more often than not. So it doesn't make sense to make a trade unless price has a healthy relationship between price and my moving average. Not unhealthy, not disorderly, not unbalanced. I want a balanced trend, right? I want price to be hugging my moving average. And until then, I'm not making a trade. It's that simple. So once again, having that knowledge, that understanding of that principle keeps me from driving on the wrong side of the road or jumping off a building, right? So once again, I'm patient. I'm allowing price to smooth out. Next thing I notice here is buyers cannot hold above open print. So the law of the 50-50 perspective, right? Where if it's not bullish, it's bearish, right? So I've done extreme amounts of study and gathered tons of information and analyzed it that 88% of the time you're going to get a market imbalance. And what that means is price is either going to go from open print to previous day high or open print to EOD and then EOD to PDL, right? Why does this happen 88% of the time? Well, it's because the market is ran off volume, off liquidity, and these levels hold all the liquidity. So it may not go to that level the way I want it to, but it will go to that level more often than not. Therefore, the decisions I'm making must be based off that information. Otherwise, I don't have an edge. So I'm being patient, I'm allowing price to do its thing, and I'm noticing buyers cannot hold OP. So if buyers can't hold it, the law of the 50-50 perspective states that if buyers aren't in control, sellers are in control, right? So now all I need is to identify my last and third criteria to enter the market short. And that is the RBI or GBI entry. The red bar or green bar ignored. So buyers can't hold open print. Sellers take control. Now we get a green bar below open print, and then we're starting to get sellers that wipe it out. So I enter the market short around 588.70, and my stop loss is right up above this green bar. I need to allow price to breathe to the extent of the green bar ignored that I'm shorting, right? Understand this. The market moves in a certain fashion. If buyers are showing up here, we have a healthy relationship and we're ripping off the critical level, I now have opportunity to enter the market short. So that was my first short play. We took the market short down into end of day, avoiding all of this chop and trading a beautiful move down into low of day and below. We took profits down here as price fell down to 58738. Why? Because I understand the very simple law that if I'm 70 cents away, actually 89 cents away from my moving average, if I'm going to hold that trade, I have to accept a pullback to the extent of 90 cents. That doesn't make sense, especially while trading SPX puts. So therefore, I'm not going to hold that trade. I'm selling that trade because of my understanding of how moving averages work. Right? So that's where I took profits on my first trade. And then price comes right back up into previous day open print and end of day. Right? Once again, these are two very important critical levels. And we have a healthy relationship between price and the moving average. We're not that extended. When we were a little extended right here, we came back up into it. Sellers responded very well. So once this, a lot of traders ask me this, Josh, why did you get in where you got in? Once this green bar gets ignored, I am entering short and my stop's going right above it. Now, market conditions have been very volatile. That's about a 70-cent stop loss. And it just is what it is. I'm going to adhere to the market principles and my criteria, and I'm going to adjust my stop. Right? If 70 cents is too much, lower your size. But do not make the trade, right? Waiting on perfect criteria. In these market conditions, it's not going to happen. Right? So we get a beautiful red bar blowing out that green bar. My stop loss goes right above it. You can see here price sold off. Buyer showed up, but they could not break above that green bar. Right? Theta got us a little bit on this trade, but we still cleared over 68%. I took profits right here on this candle here. Josh, why did you take profits right there? Well, once again, I understand how moving averages work. And look at how extended we were from my 9 DEMA on the 1 hour. Right? So yeah, we were getting a lot of selling. But once I started to see some green come in, I was out of the trade. So guys, if you take anything from this lesson, let it be. You don't need to become more disciplined or patient. You do, but that's not your issue. Your issue is you need a better understanding of how the market works, the market principles, the concepts, and with that knowledge, you can then implement them and define an approach that aligns with your goals. I hope you guys enjoyed this video. Click the links below. Get involved with a team that shows up each and every single day and executes these systems like no other. I love you guys. I'll see you in the next lesson.